Good evening. I'm your host, JSnip4, and on tonight's news, we're going to be covering. Hold on. What's that? Okay, ladies and gentlemen, we've got breaking news right now. We have the world's largest supplier of silver with massive losses and profit. Stand by. Yep. Okay. We're going to go to a chart right now and take a look at what this is. Fresnillo H1 2013 report. As you can see from the same time period of 2012, 368.8. Same time period in 2013. A year later, we have the attributable profit of 144.8. This is a 60.7% decline in profit for the world's largest silver producer. I'm not really a newscaster, and I'm not really in New York City right now. Got a green screen behind me. So listen. The world's largest silver miner. Not looking pretty. From a year ago, 60% decline in profitability. As I've said many times, $30 silver, we saw, I think it was the top 4 producers of silver, mining companies, posting losses. We now have the largest silver producer posting a 60% decline in profits. This is basically unsustainable at $20 silver. Which is interesting because as I write this, do this video right now, I see silver kind of taking a little bit of a moonshot upwards, actually, which is kind of interesting. Jumped up 63 cents here, like really quick. But back on topic, it says their profits declined a staggering 60% compared to the same period last year. However, at current metals prices, the largest silver producer in the world could be experiencing losses the second half of the year. I'm going to say absolutely. So it says Fresnillo received the following realized prices for gold and silver during the first half of 2013. Silver, $24.67. Gold, $1,471. Currently, the spot price for silver is $19.60, which now it's actually over $20. Gold was $12.90. Difference of $5 an ounce for silver and $181 an ounce for gold. And he says if we assume the average loss of revenue for the two metals would be an additional 15% at current prices, Fresnillo would lose approximately $147 million in revenue. So the costs keep rising. The cost of mining silver and gold keep rising. The metals right now are staying flat. And if last year, when I've done videos on this too, when I talked about the 4 world's largest mining companies posting losses, not huge losses, but losses. The world's largest silver producer is more than likely going to produce a massive loss for the end of this year if silver and gold prices do not increase significantly. And if at 20, again, their particular average of this first half of the year was $24 silver. So for them, if that's what's going to ultimately lead to a loss, it's not sustainable. If the other 4 mining companies or the 3 mining companies last year posted losses at $30 silver or $30 to $32 silver, that's an issue. In other words, it cannot continue. No matter how bad the powers that be want to set the price, want to rig the price, it does not matter. Because if the prices are rising in order to pull silver and gold out of the ground, and they have to be, for example, silver has to be above $32 for these guys to even break even, that automatically lets you know that silver pretty much has to just about double to go to about $40 for it to really make sense for mining companies. Now, at the same time, we all know the problems of the world. $17 trillion in debt the United States is in. China printing out of control. India, everybody's printing out of control. EU zone, out of control, same thing. if we're to look at old Lindsey Williams, and he's been talking, remember what he said about those derivatives? Watch the derivatives. He said when you start hearing it in the news, you'll hear it more and more until finally it becomes a problem. It's interesting because you have been hearing that word a lot, derivatives, this year. And his latest update from about last month sometime, middle to late last month, and this was a little bit prior to that when he got the information, he actually said that there was a period in, I think it was June, where they did a little trial run, the Elite. And there was an interbank lending rate that was around, I don't even know the percentage, but it jumped. I want to say it was like 3 or 4% or something, not that high. And then it jumped to 8 and then 12%, like overnight. And I said, I don't remember hearing about that, actually. I know the mortgage thing spiked a little bit, mortgage rates spiked and all that, but not a lot. So I went back to search for what he said, interbank lending, whatever, and I found an article, I think it was from Bloomberg, as a matter of fact, dated like late June or something like that, and it talked about that. It was like a Friday, oh my God, it spiked. Monday could be catastrophic for interest rates across the board if this doesn't come back down, and it came back down. And his guy told him, it was just a test. It's nothing to worry about, Lindsay. It will go back to normal. We want to see how quickly we can affect the world's currencies with the derivatives, interest rates, which is what this thing is tied to. And it was a little trial run to see how quickly they can manage that downfall. And when I say downfall, that means interest rates rising. Interest rates rising across the board. I think the derivatives contract, because that's all they are, is a bet on interest rates, so to speak. So any rising of the interest rates causes catastrophic problems across the board, across the world. Monetary purposes, basically, or not purposes, but for the whole monetary system. Because, let me give you the example I've talked about recently, mortgage rates. Let's say you have a $200,000 house, you're just able to make those payments, everything's okay, but you're in at 5%, or these mortgage rates, 4.5, whatever percent. If that sucker spiked to 8%, 10%, your $200,000 house, if you had an adjustable rate mortgage, you'd be finished. You'd be done. You couldn't pay the payment. If you're locked in, you're still okay. But you are still okay the rest of your life to pay off that house because you won't be selling it. Because if the rates increase any meaningful amount, I'm not talking about 1% or even 2%, although that would have an effect, it's got to be 4, 5, 6, 8% from where they are now. And if we're at 4 to something, whatever, point something percent, going back to the 1980s when stuff was like 16, 18, and possibly, I think, 20% for mortgages. I didn't go there. I'm just saying if we see like 10, 11, maybe 12% interest rates, even 8%, 8 to 12% interest rates, that $200,000 house you have instantly plummets when that takes place, when the interest rates rise. Because I'm just making this up right now because I didn't calculate this, but let's just say a $200,000 house equals a $1,500 a month payment, okay, at current rates. If the rates go up from where they are now to like 10% or 12% or whatever, and that house is still worth $200,000, I didn't do the math, but just trust me, if you want to do the math, you'll see you'll get the point I'm making. But that $1,500 payment goes up to like $2,200 a month. Like that. But you're locked in, right? You had a fixed rate mortgage. So again, as long as you're going to pay that house off the rest of your life, or however long you've got left on that mortgage, 20 years, 30 years, whatever you got, your mortgage rate stays the same at 6% or 5% or whatever it was at, while everyone else suffers. But you are stuck in that house the rest of its life, the life of that loan, because your house that was $200,000 will now be worth way, 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 way less. Let's say $125,000. Reason being is because that $1,500 a month payment, that's what has to be sustained. Interest rates, cost of the house, and right in the middle where they meet, that's your monthly payment. So when these rates rise, your paycheck's not rising, okay? You're not going to get a pay raise to make up the difference. Matter of fact, if you get a pay raise, you'll be lucky. And if you do get a pay raise, it won't be anywhere near meaningful to combat what I'm talking about right now. So here's that $200,000 house over here. And here's the interest rate currently. If the interest rates rise, the housing prices don't rise. It actually goes the opposite way. Both have to come, or not both have to come down, but the monthly payment has to come down. So maybe I had to use that as an example. Monthly payment over here, your house price, $200,000 house. Monthly payment has to stay here. It cannot go up. It'd be great if it went down, but obviously that's not going to happen. So $1,500 payment. Interest rates start rising. Price of the house starts rising. You still got to meet that median. In other words, in order for someone to buy a house right now, whatever the monthly payment that they can afford is all that matters. So if a monthly payment that they can afford is still $1,500 a month, who wants to buy your house, due to a 12% interest rate or 10%, wherever it's at, that means your house has to come down to $125,000 instantly in order for them to have that same $1,500 a month payment. And they have to have that $1,500 a month payment because, like I said, it's a matter of what they can afford monthly. They're not going to get a raise all of a sudden to take $600-$700 a month more to go get a house so prices stay the same. It's not going to happen. So I've had people comment to me about, man, I've been sitting on silver for a while. I thought I'd be higher than this by now. And I got to tell you all, I've said it before, I'll say it again. I never told you to go get silver. It's a get rich quick scheme. From day one, it is a investment that will save your financial livelihood when the financial markets and economies tank for the final time. The big collapse, like what Lindsey Williams was talking about, the little test run, crash the derivatives market. Okay, looks like they got it. It worked. Put it back to normal. Okay, Monday morning, things went back to normal. When they really let loose, that's when these things will skyrocket. That's when you can take that gold and silver, and it's worth silver hundreds of dollars an ounce due to the crisis, the faked obvious crisis that they do will cause all kinds of things to spike. It'll freak everybody out, and they'll tell you the only way to fix this, we need a worldwide currency. It's got to be good for everybody. We can't have these rising rates and currency wars, and they lower their currency and we lower ours, and we devalue theirs, or they devalue theirs, we devalue ours, and that's how they're going to sell it. But on top of that, because people are going to say, well, what's going to stop your world currency from inflating and creating money till we're blue in the face? And banks need more bailouts, and governments need more bailouts. They'll tell them, like Lindsey Williams said, they're going to tell them it's backed by precious metals. If you know this in advance, and you do, you know this in advance, do not be foolish and sell your gold or silver. This is going to happen. It has to happen. You ever hear the boom and bust cycle, also called the business cycle? The way we do business in the whole world, fractional reserve lending, the banking practices, it's all the same everywhere. Boom cycle, everyone's happy, everybody's making money. Bust cycle, people are in despair, losing their house, losing their car, finding a job, moving in with each other because they can't make payments on stuff, they got to consolidate, etc. It's just like a wave coming into the ocean, except where that happens in a matter of seconds, waves coming in and out. This happens over many, 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 many years. So it's not visibly easy for people to see. But we have technology now, the internet, history, documents being stored, videos being stored, where you can go back and research these things. And you can see this. That's why there's always a stock market crash. It goes and goes and goes and it crashes. It goes and goes and goes and it crashes. This whole market should have crashed, again, back in 08 and 09. And they barely let it crash a little bit. Okay, bring it back up. See, bailout helped. It didn't help. We are now massively in debt. So the next time the stock market crashes, which has to be in the near future, it has to be, it's going to be a big one. And again, when you tie in the rest of the agenda of them wanting to pull the New World Order currency on everybody, they have to make it count. It's got to be a big one. This one has to go out with a bang. Which also means because the precious metals prices have been suppressed and controlled for all these years, that puppy is going to let loose. So if that puppy is going to let loose, you want to get you some silver and gold now. I've been buying since $10, $15, $18, $20s, $30s, $40s. I was a buyer in the $40s. I was back a buyer when it was down in the $30s again. I was another buyer in the $20s. And very recently, as I told you a few weeks ago, I bought some more twice. 2 different weeks, I bought more. So you cost average and say, okay, I'm in at $25 on average, or wherever you're at. Even if you bought all your silver at 40-something dollars and you've been sitting this time since 2011, do not get discouraged and sell it. You have weak hands is what that's called. They've tricked you, they've fooled you, and you sold it. And guess who's buying it? I've been watching how JP Morgan has now apparently gone long on gold. They timed the short position that they've always had, just like with silver, had it perfectly, never made a mistake, always front run the market, just a step ahead of the market, just flawless victory. And then all of a sudden, it looks like they're going long on gold all of a sudden, very recently. So if JP Morgan doesn't make mistakes, somehow just has like a psychic on their shoulder, psychic full-time at JP Morgan, tells them when the market's going to move, that's a joke. JP Morgan is the market. JP Morgan is the government. So JP Morgan moves the market where it wants to. And if it's wanting to move it somewhere, obviously it knows in advance what the hell it's going to do. So it can make positions early on to take advantage of that movement. And again, JP Morgan seems to never just ever make a mistake. Just flawless victory for JP Morgan. So that should tell us that they're getting ready for a long side move or higher prices in gold. And again, gold and silver go hand in hand. So it's going to be interesting to see how all this goes down. It's going to be interesting to see exactly how they pull this off. But do not sit here and wait for another waterfall smashing of gold and silver, because it might not come. Although it can. They control it. And if they need to smash it for some purposes, they can and will do it. So, I love these people who put these technical charts. We've got the Bollinger Bands, and we've got the 10-year trend line and the 3-year. It does not matter when the markets are controlled and rigged. What matters is they've been giving us all bonuses for years by having these prices artificially low. The price is artificially low. So when I see this kind of activity, 60% losses compared to last year for the world's largest silver mining company, that's not sustainable. And the elite know we can't let this continue for too long, because then the mining companies will go out of business. So either A, they'll go out of business, and JP Morgan, who's always, again, timing everything perfectly, including like when Bear Stearns and all them went under, JP Morgan was there to like buy everybody up, pennies on the dollar. That's what they do over the last 100 and something years. It wouldn't be surprising if they let the mining companies fail and then go in there and buy them out for pennies on the dollar because silver and gold prices came way down. And then all of a sudden the prices skyrocket. Now JP Morgan and the big banks own a lot of the mining companies, world mining companies. That's a possibility. The other possibility is that they don't want to do that. They may think it's too obvious nowadays. Then again, history repeats, and I don't think they care. But let's say they don't do that, and they just assume, look, we've been pushing the prices down too much. We can tell by the numbers of these mining companies, they're not doing good. We know they're not going to stay in business long. It's time to turn the gold and silver prices upward. We're ready for it. Let's go ahead and let it run loose a little bit. Maybe they'll only let it run up to what's sustainable, where these guys can make just a little bit of profit. $40 silver, $1,600 gold, something like that. I don't know. And then when they're ready to really pull the trigger on the world economy, then those prices skyrocket even more. They can do it however they want to do it. That's why I say it's going to be interesting to see how this goes. But wanted to share that with you. Take care.